In this case, when I'm taking an insurance, I need to provide every information to the insurance company in the utmost clear manner. The subject matter on which the individual enters the insurance contract must have a financial gain both to the insured as well as a person who's taking the insurance in case of any destruction or loss. Once when you get unfortunately hit by an accident, you will claim insurance from where you have taken from. Yes, you are going to get a compensation for it. Good morning and welcome to the first session in Unit 1 Insurance Management BCom third semester, where we're going to talk about Introduction to the Insurance Management. Now, what is insurance? Everybody knows, but apparently when we talk about insurance, there is a lot of inner meaning to it. Now, let's try to understand insurance in a very simple manner. In simple words, insurance is a contract, a legal agreement between two parties, that is the insured and the insurance company, which is called as the insurer. In this agreement, the insurer promises to help to cover the losses, whatever happens in case of contingency. The insured, the person who has taken the insurance, pays a premium in return to the promise made by the insurer. So when we look into insurance, the first thing that needs to come to the top of the mind is that this is a legal agreement between two parties. This is not just any other contract. This is not something like a word of mouth, but it's a legal agreement which says that the insurance company will help the party in case of any problem, in case of any contingency, based on the terms and conditions on which the insurance is signed upon. Which means to say that in case if there is going to be a loss, and which is very much written within the means of the document, the insured, the insurance company is going to take care of it and you are going to be compensated duly. Followed by which the principles of insurance, like any other subject in this world, insurance is also subjected to certain principles. And these principles are mandatory for each one of us to know. Why? Because at the end of the day, we need to understand if you don't maintain those principles, if you don't follow those principles, then we are not making ourselves legally binding to it. So at any given point of time, let's first understand what are those principles, and we will take a deep dive into each one of them. Starting with the utmost good faith, proximate cost, insurable interest, indemnity, subrogation, contribution, and loss minimization. So you know that we have about 7 important factors on which the entire insurance is built upon. Now, why these factors are coming now? Why do we need this principle? Because the proper functioning of insurance can happen only when you have undergone each one of them individually. So let's start getting into the principles of insurance. The first one coming up is principle of utmost good faith. Anything that in life we do, it depends on a single word called as trust. We believe. We trust that things will happen in the right way. We hope that tomorrow is going to be a good day. And that's exactly what works towards an insurance also. Each one of us who have taken insurance have taken in the good faith that insurance would stand by us in case of emergency. Insurance will lead us to that path where we need the money to support our family, to support our living standards, and to be with us in the case of rainy days. Now, let's talk about this factor very clearly. Whenever we're talking about an insurance, it is signed in a good faith, which means to say that there's a clear and concise information that's provided from both sides. That is, we are going to talk about the terms and conditions, and the person who's getting insured also understands it. In this case, when I'm taking an insurance, I need to provide every information to the insurance company in the utmost clear manner, which means to say that no hide and seek. Let's not try to cheat each other. The aim of insurance is not to draw compensation. The aim of insurance is to make sure that at any given point of time, you have been taken care of for all the hard work, for all that sacrifices that you have made for your loved ones. So at any given point of time, please understand that whenever you are signing a document, signing a contract with an insurance company, you are signing it with your moral conscience. You're understanding that each and every word that is written there is true. Then only the insurance first principle is satisfied, which means to say that both the company and the party have understood each other. They have signed it in good faith and terms, and we can proceed taking the insurance. Now, let's go further. Try to understand the principle of proximate cost. Word might look big, but then it's quite simple for us to understand. Causa proxima, which means the nearest cause. This principle applies when the loss is a result of two or more causes. So you will find that this insurance will find what is the nearest factor that happens to a particular property or to a particular person. Now let's take an example to understand it very, very clearly. Let's say that you have taken an insurance for a building, and the building unfortunately gets into a fire accident. Now, when you're going to claim the insurance, the company is going to ask the reason, the cause for the fire breakout. The fire breakout might be due to multiple reasons. It might be due to the shortage of power, or it might be due to an unfortunate incident, a sudden spark, or it might be due to a natural cause, or it might be due to some inflammable substance just bursted out. But then for the insurance company, what we need to understand is the nearest factor. What could have been the nearest cause? What could have been the most possible way that particular incident would have happened? And we will pay commission only for that. We are not going to take everything into consideration like that. We're not going to put multiple causes and say that A plus B plus C is equal to D. I'm not going to do that. I'm going to find out one single cause, which is the nearest fraction value to it. And I'm going to say that I'm going to compensate you for that particular factor. So that's why the insured must be paid for that particular composition. That's why. This is the most important thing when we talk about the proximate cost factor. Now the next one. In this factor, now let's see how the example works. Due to fire, a wall of the building was damaged and the municipal authority ordered for it to be demolished. While the demolition, the adjoining building was also damaged. The owner of the adjoining building claimed the loss under fire policy, but that was not true. The reason here why the building was destroyed was because of the demolition that took place and not the fire. The fire actually took place on the wall of the building. So now when this person is actually claiming under fire, the nearest cost to the loss was payable as the falling of wall is the inevitable result of the fire. So now what happened is that the court held fire is the nearest cause. Now what happens here is it's not just the demolition, it's the fire that led to the demolition. So fire is the primary cause and not just the demolition of the building. Moving further, principle of insurable interest. It says that individual insured must have an insurable interest subject matter. Now this is very interesting. Why? Means the subject matter on which the individual enters the insurance contract must have a financial gain both to the insured as well as a person who is taking the insurance in case of any destruction or loss. Now, how does this comes into picture? Let's look into an example. Why? Because every time when you go through an example, you will be able to understand the factors of insurance very clearly. Now, look into the example. The owner of a vegetable cart has an insurable interest in the cart because he's earning money from it. However, if he sells the cart is no longer belonging to him, so there will be no insurable interest in that. To claim the amount of insurance, the insured must be the owner of the subject matter. Now, this is very, very important. When I'm taking an insurance, it should be a subject matter of concern to me. If I take an insurance on a subject matter which is no way related, where I'm no way connected, I cannot claim the insurance. So it's very, very important for each one of us as we are studying this subject. Are you the primary party connected to that subject? If you're not that primary party, it's not a matter of your concern. You are not going to be compensated at all. So do not make it a factor or a feel-good thought that, anyhow, I would get compensation. No, you would not get. Because unless and until that property, that material or that subject is owned by you, there is some problem that has been caused, then for that you will be compensated. Once you have gone away from it, once you have sold it, it is no more belonging to you, then the insurance also leaves away from you. Now, moving further, we're going to talk about indemnity. This work only done in coverage of loss. Hence, insured should not make profit from insurance contract. Very, very important policy that I would like to talk upon today. Is insurance a profitable business? Answer is yes. But can we make profit out of insurance? The answer is no. Insurance as a business is different. Insurance as a policy is different. Now, the aim of insurance is only to provide you compensation in case of loss, natural or man-made. But if I start taking insurance as an ideology, as a shortcut to make profit, then I'm proving myself wrong. So that's where it comes here very, very clearly that the financial position on what has happened, how it has happened, why it has happened. All these things are very, very important. Now, just to make profit, I enter into an insurance contract, create an havoc out of it, and then go back to the company and claim saying that, sir, this was worth crores of money, so I need to be compensated. Actually, I'm doing the wrong thing. So that's exactly where we come back and say that the insured should not make any kind of profit from the insurance contract, because if he starts making it, then that's against the principle of indemnity. The indemnity says that it's only for the purpose of emergency and not for the sake of making profit. Let's have a look into it. Now, the owner of a commercial building enters into an insurance contract to recover cost of any damage in future. Absolutely not. Why? Because structural damages, then the insurer will indemnify the owner for the cost of repair of the building. But then what is very, very important here is that you will exactly get the amount for what it has happened. You will not try to make a profit of it. You cannot go ahead and break your own building. You cannot create your own clause and then come back and say that please compensate me, including the building cost. And that is not going to happen. So you have to be very clear when you're doing this insurance contract, you are paying only for what that is going to get compensated for. Now, the next one, subrogation, which means to say that one party stands in for another. This is a principle of insured, which means incurred loss, the subject matter is insured, the rights of ownership of the property goes to the insurer. Subrogation gives the right to the insurance company to claim amount of the loss from the third party responsible for the same. Let's try to look this from a third point of view. Let's try to understand with an example, because that will make it more easier for us. Let's say a person named Mr. A gets injured in a road accident due to reckless driving of a third party. Now, the company with which A has took accidental insurance will compensate the loss to Mr. A and will also sue the third party for the money that has to be paid recovered. Now, this is two ways that you need to understand. Once when you get unfortunately hit by an accident, you will claim insurance from where you have taken from. Yes, you are going to get a compensation for it. But at the same time, the company will also take an effort to sue that person's insurance, saying that because of your reckless driving, my client got hit. So you also need to compensate for that. So subrogation says that one standing for the another. So that's why this principle is very important. Followed by which we end to this particular session. I hope and believe that all these factors that we have spoken today is of a great importance. Why? Because these principles and factors, as we are talking in insurance, will matter a lot for you to understand the subjects. In the coming session, we are going to talk about the ethics, the principles, the contribution history and scope of insurance. But until then, stay tuned, stay blessed, and stay learning always. Thank you once again for joining me today on this wonderful session. You have a great day ahead.